Wow, good morning, Stocktwits Nation. Good morning, bad morning, bloody morning. The markets are down again. That's why we have basically the Avengers here. We need as many humans as possible to figure out what the hell is going on. So with us today, we got Ace the Kid, of course, Michael Nauss, and Shay Boloor. And joining us in just a few minutes, probably after he's going to send another manifesto on Twitter, is Dan Ives of Wedbush. So we have a lot to talk about. Usually Shy and I, during the week, we chit chat a little bit. We're just going to get into it. I'm just going to start with you, Shy. Rapid reaction to what happened yesterday and what you're seeing today.
Well, QQQ just entered a bear market this morning. So looking at that setup, it's pretty bearish. I mean, it's also what camp are you in right now? Do you think that I believe this downturn really isn't macro. It's a collision of politics and pricing. I think that the market is bracing for a tariff increase that they just clearly weren't expecting. Like, who underwrote China being up 54%, 35% on Taiwan semiconductors? Like, these are way above all initial estimates. So I do think like we are entering a bear market, which is somewhat worrisome, but the 10-year is rolling over. Like, that was the whole initial goal from Trump, high stakes poker game. And oil is also coming down with the OPEC raising production. Like, I do think the Fed is going to be under a severe microscope and under pressure to ease. And it might just take one or two circuit breaker moves in the equities to make that final push for Powell to go that full dovish when he speaks today. And I do think that stage sets up for a pretty vicious rebound, because if negotiations move forward, if tariffs are scaled back because this is a negotiation tactic, even modestly, that's enough to justify an oversold nature bounce.
Yeah. And you guys have any thoughts on what you think Powell is going to say today? Is he going to keep it neutral, or do you think he's going to come in hot?
Well, it's usually always pretty volatile, so I would expect some volatility for sure, no matter
I
what.
am
But
data dependent. So
yeah,
we can do a drinking game. I'm gonna every time he's asked something and responds with data dependent, take a shot and just end your Friday early, because I think the guy has to hate all this, right? He just wants to. I got my two levers to pull, right? I've got my quantitative easing and tightening. I've got my rates, and just leave me out of all this other craziness.
Well, can you imagine if his walkout song was "Fuck Donald Trump" by YG?
that would be funny.
Wait.
Whatever they pay that man, it's not enough. Because he's this, the economics nerd, right? He just wants to play with his little models and whatever, and then now he has to deal with all this again, right? He's done. That's the thing that I want to always bring people back to. All this happened before. We had trade wars with China. We had Trump bullying Jay Powell on Twitter. It happened 2018, 2019. Look at the chart. Looks pretty much like it looks like now, which wasn't a lot of fun. Ruined a lot of Christmases.
Yeah, I'm saying now he's doubling down. Trump vowing his policies, quote, never change, which doesn't seem factually accurate, but it sounds like, he could give a damn about what China's doing. But let's flip to that. We have a 34% tariff slap back our way. Jordan, what did you see that one coming? Is that something that was expected for you, or is this new news?
Honestly, I expect it, just with everything going on. I expect the most crazy and the most chaotic way of doing things to kind of come about. So, but I think that's bringing all this uncertainty in the market. And, you can look at it two ways. You can look at it from a negative perspective, or you can look at it from a positive perspective. And I just ask everybody to throw SPY on a yearly chart and tell me what you've seen from every negative catalyst ever. And we've always rebalanced to all-time highs since that. So I do think all of this is a buying opportunity. I don't necessarily think this is the bottom right here, right now, but I do think the market can come in much more. But at the end of the day, these are the prices that everybody's been waiting for. Everybody wanted Nvidia under, $100, and like now all these prices are here and nobody wants to touch it. And it's funny. You see, the stock market is like the only market in the world where people run from a discount. So I'm loving this. Trading the short term, the opportunity is amazing with all the volatility we have, and it's just more opportunity for us to pick up lower prices for our long-term investments. So I think it's a great market. Aside from the political side of things, I think just putting your blinders on, not worrying too much about that, and just playing the charts is the best thing I can do for myself at the moment. And I think for a lot of investors, that's probably the best bet. But
All right,
We'll see
Ace
what
the
happens.
kid, like a ray of sunshine in a world so dark. Michael, Shy, are you as optimistic as Jordan here, or are you feeling a little different?
We are screwed. Run away. No, I mean, time horizons. It's all about time horizons. If you guys are 5+ year out investors, this is the opportunity a lot of people have been communicating, they've been dreaming of entering this year. If you're a short term trader, even in the medium term, or you have a fixed portfolio that you can't really have a DCA plan of cash infusion weekly, monthly, it's slightly worse. Like you'd probably should raise some capital and stay on the sidelines until the noise clears, until these key moving averages stop sloping down, and you wait for that to buck back up. But if you're someone like, for anecdotal experience from me, I have cash coming in every single week. I've been slowly adding. I have a big cash position, 20% right now. I'm still adding. Today it feels capitulatory a bit pre-market. It thinks maybe we'll get a circuit breaker because the VIX is at 50. That's a black swanny when it hits 50. So that's typically an indicator to me, add, because there's FUD and fear in the market right now, and there's going to be some kind of relief bounce, and especially in a policy-driven sell-off. Those are the easiest levers to turn when the market looks like it's just blood. So I've been adding. I'm going to be more aggressive today, and hopefully my cash position will probably be like 10 or 12% with some deals today.
Michael, how about you?
I couldn't agree more. You got to zoom, you got to chill out, you got to zoom out. You got to realize every time we have these giant fixed rallies, at some point there's a bottom. I think you hit the nail on the head. It's all about time frame. If you're looking to buy something and sell it a couple weeks later, this might not be the time, right? Wait for things to calm down a little bit. But if you're a long-term investor, especially if you're young, this is what you want. You want crashes. And the people who bought into them, again, I'm old enough that I was here in 2008, where there was people who generational wealth was made buying banks in 2008. It's 2020. Imagine buying Zoom and Peloton and all these names. So for me, as a technician, I'm just looking for what is not being sold. And I'm just dipping my toe into those, knowing that when the market calms down, those are probably going to be the areas that do the best. So yeah, make your shopping list now. You don't have to pull the trigger right now, but this is the time to work. This is the time to get to work.
Yeah.
Also, adding some more color to that, like, guys, the fourth industrial revolution is still here. It doesn't last only a couple weeks, couple months. Like this sell-off, like we're seeing a sell-off right now that's not based on broken fundamentals. It purely is on a narrative deterioration. And all it takes is some kind of stabilization in the narrative to trigger a powerful re-rating across the board. And the bar for Q1 earnings is as low as I can remember in quite some time. So if you see companies like the Nvidias out there, the Palantirs, the Metas, like if they simply guide in line, not raise, just in line, not blow out expectations, just be good enough, just hold the line, we could see some violent upside moves in names that have been oversold purely in fear on something that really hasn't materialized yet. It's just front running on an aggressive side. So that screams opportunity for me, but also every investor is different in their time horizon, risk profile, and how much cash they can infuse into their portfolio. So that has to be factored in.
So where are you guys seeing the opportunities right now? I mean, we go back to 2020. It seemed very obvious. It's like, okay, we're all inside. Like it was the stay-at-home move. What is the play here? I see people sharing out Philip Morris charts, Campbell Soups. What are some of the pockets of opportunity that you're looking for as things like tech are just getting beat down?
Yeah.
Philip Morris looks great, actually. I just brought up the chart. That chart looks fantastic. So yeah, things like that. For me personally, it's just you look at things like yesterday, you can run a basic scan. Show me all the stocks that weren't down yesterday. That's a great hunting ground, right? Show me all the stocks that aren't down this month. You might not think that there's many, but I ran a scan that says, okay, show me all the stocks that are above their March lows. There was in the Russell 3000, there was 450. So that's what I'm going to do this weekend. I'm going to go through all 450 and find some opportunity. It's one of those, it's out there. You just got to look. You got to hunt, right?
What about you, Jordan?
I'm taking it a lot more simply at the end of the day. I sold a lot of individual names that I was holding from last year. I'm not going to say I'm this amazing investor. I got very lucky with a lot of the positions I took. I positioned myself correctly in 2022 during the dip, and I had a lot of individual names that did me very well, and I took those off and basically was just de-risking. And so now what I'm looking for is sheerly just to put that money into the SPY. I'm not looking at individual names anymore. The only individual name I do hold now is Tesla, because I love my Tesla and I don't want to sell that. But everything else is gone, and I'm just focused on the SPY and QQQ ETFs, because for me, I'm definitely more focused on the short-term price action as like a day trader and a futures trader. So my focus is put towards that for the majority of the time. So just buying dips on the ETFs makes things a lot more simple, and just, hey, when we're at my spots, cool, I'm throwing cash in, and otherwise I'm not too worried about it. I try and keep the two accounts very separate, because if I'm looking at my long term all the time, like for instance this morning, you're just so worried about it, right? But if I can trade the short term and I'm worried about that, and then I can have my levels ready to go on, VU, which is the SPY, and QQQ, it just makes it a lot easier to go through these dips. And that's what I would say for people in the chat to do. If you struggle heavily with these long-term holds, but you're also trading throughout the intraday, I mean, keep the two separate and just understand, hey, the long term is 5+, 10+ years out. Things are going to come down, and when there are opportunities, I have to take advantage of them. And in the meanwhile, we'll trade during the short term and have a blast making some money during the short term. So I just think, again, it is a beautiful market right now. I know a lot of people, there's just so much uncertainty and people are freaking out, but this is exactly what we want, as Michael Nauss said, especially if you're under 30 right now, this is the time. I mean, to stack cash and take advantage of these dips in the market. Again, I don't think this is by all means the bottom of the market or the bottom of the year, but I mean, this is the time to start scaling in. And with the ETFs, something like DCAing, I think that's very viable. And then having those spots where you want to put some bigger limit orders in, that's exactly what I'm doing. So we'll see how it works out. It worked out in 2022, but I was doing it with a lot more individual names. So we'll see how it goes just using SPY.
Shay, I want to get your take on something with the China tariffs, because I read there, speaking of this, the Industrial Revolution that you talk about all the time, and AI, the tariff specifically on the rare earth materials, are those the things that we're needing to get from China to power all of these systems? Or have you seen that headline? Like, does that affect, how deeply does that affect tech, and how deeply does that affect your thesis on this fourth industrial revolution?
It doesn't affect it too much. There's competitors, or there's names out there like MP Materials that kind of offer rare earth material in the U.S., so we don't have to go straight to the East to get that. I think it'd be substantial if we didn't have names like MP to provide that to us, but I don't think it's too destructive. But to going off of your point on the initial question as well, is like, how am I identifying which names to add in this environment? You guys are all the listeners know that I'm a thematic investor, a long-term time horizon. So like, I focus on long-term narratives, not short-term price movements, which is essentially, this is exactly what that entails, is short-term price movements. Nothing on the fourth industrial revolution not happening. So I do think that I'm focusing on names that are stocks that aren't chasing temporary fads. They're architects of structural shifts that will take years, sometimes decades to play out. And when it does, there's a ton of runway that they're going to become the new Mag 7s. I don't want to say new trillion-dollar companies, but they're going to become the new phase of mega cap companies. So some of the questions I ask myself, like, do they have a moat? Is it based on scale? Is it based on customer loyalty, sticky ecosystem, or some kind of unique logistics network that have these black swan policy impacts? Can they control their risk costs associated internally, so they have to go externally to third parties? So I think there's a lot of digging that a lot of investors need to do now to figure out, like, not just the financials, not the technicals, but the actual ethos or thematic or ecosystem of each company, to see what are the barriers of entry for competitors to enter that space. How defensible is that moats? Because usually those are the levers that can cause pricing powers. When things are going up and up, they can match that incremental costs and even do more because of that pricing power that they have with that sticky ecosystem that can't be replicated. It's like the Palantir. Like, we're going to talk to Dan Ives pretty soon. Like, a couple of names that he loves, I've been massive bulls on for years. Like, Palantir's AIP is infused into so many different companies' operating systems. Like, that can't be replicated. You're seeing Tesla try to scale autonomy that nobody could have ever dreamed about. And that can't be replicated. You can say, fine, Google Waymo, but that's a very small box to the sandbox that Tesla's trying to solve. So I'm excited. I think there's going to be some real deals in Q2. I don't think the selling's over, and have that dry powder ready and that list prepared.
Yeah. Michael, I want to flip over to crypto. I know you dabble in this space. What's going on in crypto land today? How's the crypto world reacting to the macro environment?
Insanely well, right? If you chart crypto versus the Qs normally, it's a pretty much a one-to-one relationship, right? Bitcoin in particular being a leveraged, looks like just a leveraged version of the Qs. However, right, talk about, anchoring to that March low, we're well above that in crypto. It's flat a little bit. Bitcoin's doing well. A lot of these meme coins are actually doing fine. I went through and looked at a list yesterday, and some of the weirder ones, right? Pepe's up 4.5%, Fartcoin's up, Doge is up 1.3% right now. Atom is up 5%. So across the board, we're actually just seeing a lot of decent crypto action out there. And crypto wasn't a safe haven in 2020. It wasn't a safe haven in 2022, 2023. Yes, it's down a lot on a percentage basis from highs, but that's what you expect with Bitcoin. But for Liberation Day, it didn't care. It didn't move that much. It was actually up a little bit yesterday and about flat today. So one of those things that maybe now finally people are using it as a place to go. I think maybe because gold's a little bit overextended, so people are looking for places to put their money. Gold, you kind of missed the boat a little bit with, so people might be moving a little bit into crypto.
Yeah, I was just if we can pull up the gold price too, because that also is down and went down yesterday. So Michael, your take on that is it's overplayed. People are looking for other places to put their money right now.
Yeah, because bonds aren't helping, right? TM or TLT was down yesterday, right? It was down the day before. So during this craziness, bonds were not helping. Gold, yes, it's been doing fantastic, but it was still down today. So people, we got to remember, large institutions, generally speaking, they have to be invested somewhere. They're not allowed to be in cash like we are. So where are they going? Looks like some of it's going into Bitcoin right now, and again, could be a place to hold that value until they're looking to redeploy it later. So, we were talking about relative strength in other places. Well, I'm looking at like Robinhood, right? How much is that going to benefit Robinhood? Still above its 200-day moving average. Didn't participate as much in the sell-off as a lot of things out there. So, if crypto is going to hold for us that are mainly stock investors, there's a lot of places to look now, either the ETFs or Robinhood, Coinbase, places like that you could find that are stocks that, if crypto is going to hold, could actually be good places to put our money in the meantime.
That's actually a great point. Looking back to 2020, even that was where all that growth came from on those brokerage platforms. So, and even in 2022, it wasn't as dramatic, but it will be interesting to see in their next earnings calls what the usage and behavior looks like, because of course they're making a lot of money on the transactions. Let's move over to see what's trending on Stocktwits. It feels like everything's trending. I feel like the chat's popping off. Guys, Dan's coming soon. Do not worry. This is not. Someone asked if it was clickbait. It's not clickbait. We would not do that to you. He will be here soon. But yeah, let's look at. So Shay, you tweeted about Nvidia. How significant is this drop below 100?
For Nvidia, it's pretty significant because my favorite level for Nvidia was always the anchored average VWAP from January 2024. If you use that for the past year, every time it's dipped, it's bounced off that level. April 2024 bounced. Yen carry trade crisis, August 2024 bounced. Even like the beginning of March, it bounced there. We sliced right through that. So there is somewhat of an air pocket right now for Nvidia. Once it broke the psychological level of 100, once it sliced through that 105 level anchor average VWAP, there is a vacuum right now on where is it going to fill, essentially. So I think, the 100-week SMA level is at $89. So I think, I don't know, I could see it going there, but Nvidia is just such a narrative problem. I think there's going to be something substantially, it's going to take an earnings report for them to really buck the narrative issue. But technically speaking, there's a big volume shelf at $89 that correlates with that 100-week SMA level that I could see if things his circuit breaker level, they break 90, and that might be a bounce spot. And I'd maybe go look for a trade there, to be honest. Like, I think Nvidia's not going anywhere at all.
Yeah. Jordan, you seem very chill, locked in. I feel like you're multitasking over there, which is like.
Oh, I'm always looking at these charts.
I know.
I'm always.
I think it's like amazing because you're just like F it. Like I'm chill. You guys are crazy. So you're in your bag. You're in your zone right now. But is there anything else you're kind of looking for signal wise or watching as you are playing the game here today?
I guess I do want to see what happens with Tesla today. Tesla does love its Fridays, and it's been holding up, kind of just going sideways for the most part on the daily. So I'm kind of interested to see if it gets anything going today. And obviously, if Tesla's ripping or tanking, that's definitely a bit of a catalyst for QQQ and the Nasdaq. So definitely want to keep an eye on what Tesla's doing. But we've just been going sideways. That's why I'm excited Dan Ives is coming on too. I know he loves Tesla. I want to get his thoughts because we've kind of just been doing nothing here at the bottom of this range since we hit that 217 area. Interested to see where we're going to go from here. But just for the morning, looking at NASDAQ, I mean, I'm kind of expecting a bounce this morning as of what I'm seeing now. We came down into a big area. We've hit targets for a lot of the bigger shorts from the past 2 weeks. So, I'd like to see some buying step in today, but I don't know for sure. It's looking really weak right now in the pre-market. We're making these higher lows, trying to get the structure changing, but it looks weak. I don't see any real strength. So I want to see how the morning goes, see if we can get some real strength going. Maybe we can actually hold the low that we made today and get some buying going. But the weekly profile for this week has played out exactly how last week has, which is Monday, Tuesday were a manipulation of price to the upside to just bring it lower. Wednesday, Thursday, Friday. Wednesday was the high of the week, and that was the last 2 weeks. We've seen that exact model play out. And so, not surprised to see the market down even more today. But I would like to see a retracement back down since we've had that profile play out 2 times in a row. That's just not normal from what I've seen in the market. So would like to see a retracement. But again, I've said this for 2 weeks. Everybody loves to think, oh, the market just can't go lower. We're down 11%, 12%, this or that. We can't go lower. We absolutely can go lower. I'm all for, taking part in the dip on the long-term side of things, but short-term, you have to realize that it's extremely hard to pick bottom. You're probably not going to do it. And even if you do, you're probably going to take losses so many times up to the time that you finally get right that it's not even worth it. Like, okay, you're right now, but who cares? You were wrong so many times before, and how much money have you lost on those times? Are you going to be able to make that back on the winners, right? So at the end of the day, this market can always go lower. Don't think for a second that it can't, because that's exactly when the market's going to show you, hey, I'm going to make new lows and I'm going to keep going and scare the crap out of you, right? And that's what you're seeing in this whole market. And again, it's just funny. Put SPY on a yearly chart, and it seems like we haven't even made a dent in the moves up that we've made, right? So It's all in context. It's all a matter of your time frame and how you're trading. Obviously, everybody's different, so everybody might have different thoughts there. But I think, again, mass freak out is not the way to react to this, in my opinion, right? We have to take it and say, hey, this is happening for a reason, right? And how can we be a savage and take advantage of it instead of like whine and cry about it, right? You see everybody just whining about it. It's like, okay, I understand, but this is happening and it's going to happen no matter what. So how about we figure out how to make as much money as possible from it and set ourselves up for the future? And that's all I'm interested in right now with the charts. So
I want to put that speech to like the battle hymn of the Republic or something and just blast it to the airwaves. Well, speaking of could things get worse, so JP Morgan, they lift their recession odds to 60%. I think it was 20% like 10 days ago. Either them or another bank put it there.
Bullish.
I guess raise your hand. Do you guys think it's higher than 60? Raise your hand if you think it's higher than 60%.
I think it's 90% if it lasts more than 6 months. If it's less than 3 months, it's no recession. So like I think that's like fitting in the middle of like time frame on how long if this is a bite not bark. I just don't think that Trump, his ego's too big to cause a man-made recession, to be honest. Like I just don't think that's gonna happen.
Michael, you said bullish. You mean you're bullish on recession or bullish?
Every time the bags come out and start to pick, and it's funny, it's actually taught in the CMT curriculum, the magazine indicator. As soon as we start to see economists on the Economist that, hey, it's a bad market. As soon as JP Morgan starts to say, hey, we're definitely going into a recession, all of those are very bottomy things, right? The analyst turn bullish only when it's about time to buy. So I'm looking for more of that. Again, I'm with Jordan. This thing could certainly go much lower. We're getting 5% down days. It definitely could go lower. I just think it's one of those times where it's too late for me to short, so I have to start looking for stuff to buy and kind of waiting for those particular moments. So, yeah, the more we see Goldman Sachs and JP Morgan, all these guys turning bearish, the more bullish I get, right? I wish I
Absolutely.
had an indicator for that. But yeah, as soon as we see the Economist and we see the cover on the Economist talking about how the market's dead and Trump killed the market, that will probably be the time you jump in with both feet. But if it's only JP Morgan so far, then it might be a little bit more time to go.
Well, it's
Yeah.
funny you mentioned that, Michael, because at the beginning of the year, all those analysts were extremely bullish at the beginning
Yep.
of the year, and now they're all flipping.
Well,
Might
'cause
might
they're
give you a
all-
little tell on something, huh?
they're all backwards looking. That's the
Yeah.
thing. Like whenever they follow the Momo, it's as crazy as it sounds. They don't want to stick their neck out. Why would they? They don't get
Yep.
paid to do that. So it's always backward looking, and that's why typically when Kramer says a comment, for example, like it's because the move already has been made. It's been priced in. So that's why the inverse occurs all the time when Kramer says something. Like just know this about this game.
Yeah, everyone chases price. Everyone's a closet technician following trends. It's just us technicians we're out in the open with it, right? I have no idea what's going to happen, but when the trend changes and starts to point higher, then I'll start to buy stocks. And until then, but yeah, you'll get more and more of this. You'll start hearing like back when I used to day trade full time on a prop desk and at a hedge fund. One of our favorite indicators was the market in turmoil, the CNBC market in turmoil. You could almost guarantee that that was near a low, and then it was time to start legging into stocks. Uh, by the third market in turmoil cast, then you knew it was time to go in. It was time to buy.
I do think it's effed up though. To be honest, like I was like college student who actually relied on these figureheads on speaking on like what's gonna happen in the market. So like I participated when they verbally said something. I was always behind. I was always holding the bag, or like I was like I'm negative. Like that. It's frustrating to see, but it's really important to like, hear what Michael's saying, what we're all saying on these talking points are backwards looking. You have to
One
get
of
from the moves.
and I was a college student and I was trading at a desk all day. And one of the things that I would do is Kramer came on at it was like 3:30 in the afternoon. And he would come on and there's literally a floor of people managing millions of dollars waiting for him to talk about a stock and just taking the other side of that trade intraday. And it was a way to make money even back then. So it's one of those we used to do it physically. Now I'm a quantitative trader, so now robots do that kind of thing. And it's just the way it works. By the time it's gotten to his editors and it's gone through all the channels and then he talks about it, you're just at the end of a trend that's been existing for some time, or else he wouldn't be talking about it.
Yeah. As we get closer to the opening bell, I want to kind of Shy and I talk about this sometimes. This the tariffs taking our medicine. I think Shy, you've likened it to Ozempic. I feel like it's like more like ayahuasca now. Is it cyanide? But the post from Trump this morning was very metaphorical when he said the operation is over, the patient lived, it's healing. Prognosis is that the patient will be far stronger, better, more resilient. Shy, do you still think this is like Ozempic, or do you think it's something else? And then I'll flip it to you, Michael and Jordan.
I think he's just grasping at a lot of leverage. I don't think he even knows specifics on what that's going to be.
You're like, I don't know what the hell that means.
I know big pharma. It's just big pharma he's going to tackle, and I just think he's pulling out all these brute force levers to overwhelm the reality to force everyone's hand. Like he just made a comment right now, like China just played their cards wrong on retaliation. So now there's probably going to be some other retaliation that Trump's going to do on top of that. Like until someone breaks, and I can tell you guys this, the U.S. will not break. So like it's just going to be at the expense of investors, consumers, until everyone else kind of waves a white flag a bit or they start negotiating. But in that meantime, it's going to get ugly. Like QQQ is going to break 400. It's going to get bear market environments. And I just know in the long run, which again, we're long-term investors, we will be fine. Like, it will bounce. Nobody knows when, but it will. But don't get greedy. Live to trade another day, and just be cautious.
Michael Jordan, what do you think? Do you think this is like the reset moment, Ozempic, or is this something worse? And not even politically, just looking at what you're seeing in the numbers.
I think
Are we
short-term
stronger
pain
right
for long-term gain
Yep.
at the end of the day, right? We need interest rates down. There, there's a big camp of people that think, all this uncertainty is sheerly to bring those interest rate down and get people to start buying bonds, which I definitely can agree with to an extent. So at the end of the day, I think that's all it is. I mean, we had a very overinflated market these past 4 years. I mean, everybody, we all talked about it too. That's what's funny. We all talked about it. We're all trading it. We're ripping off war news. And everybody is saying like, oh, we shouldn't be ripping. We shouldn't be going this high. We shouldn't be going this far. And to me, I was just, that bell's still going. Oh, there we go. That bell was going for a minute. But
They really want to let us know that it's time to lose money. Or make money if you're you, Jordan.
But it's just, it's interesting because to me, it's just, we're rebalancing completely from what was created these past 4 years, right? It's just a simple rebalance of we were ripping when we had all these wars going on. Everybody was saying, hey, we should not be going this high, but we are, right? I was just following price action. I knew, fundamentally we probably shouldn't be going this far, this fast, but that's what we're doing. So I'm just going to play the charts. But now everything's starting to actually feel the effects of these past 4 years. And I mean, I think Trump's trying to fix that, right? I mean, he's bringing in, he's saying, no, we're eliminating all the spending, we're bringing down the debt, and we're going to try and fix things at the end of the day. So, I mean, I'm trying to take advantage of that. I think that's exactly what's happening. Even if it's not, let's say that's not what's happening. Either way, it doesn't matter. The market's still dipping. The market's still giving us opportunities. So as for the reason why things might be happening, I mean, I have my thoughts, but I don't really care. It doesn't matter. Prices are coming in. That's all that matters. So we want to take advantage of those. The reasoning why, it's just like, I mean, again, look at every negative catalyst for the market over the past years. And it's like, do you really care what happened and why it happened? Or were you just trying to take advantage of the opportunity? And that's where I'm at. I just, no emotion, blinders on, strictly facts
cold.
and logic. Yeah, just ice cold.
Ice cold, no mistakes.
Oh, yeah.
R.I.P. Val Kilmer. May he rest. Michael, what's your read? Because I think you guys are all bringing up an interesting point, which is like looking at the longer term. And there's been a lot of conversation of how long is it going to take to actually get this manufacturing muscle back up and running in the U.S. You got to build things, you got to hire people, you got to train people.
Years, long time.
How many years? 2, 10?
This decade, let's cross your fingers if it happens this decade. It takes 2 to 3 years minimum. Like if it happened today, it's gonna take 2 to 3 years just to put the infrastructure in place. The execution alone is gonna be another couple years. It's going to take
America,
a long time.
Shy. We put a man on the moon. You don't think we can set up some?
I don't think it will get that far, right? I think it's going to get to the point where there's going to be enough pain. He's going to get some concessions from these other countries, declare victory, and we'll be here next year talking about something completely different. I don't think it's one of those that it's going to exist for his entire 4-year term. You know, you guys have midterms coming up, all that kind of stuff. So things need to change at some point. So yeah, I think at some point you're going to get some sort of, I had a great meeting with XYZ person from this country and we're lifting the tariffs. And then as long as he has something to show with it out the other end to kind of maintain political capital and all that, then we just move on to whatever's next in the market.
What is happening?
What is happening, Shy?
No,
what are you looking
one
at?
Of my stocks
Live?
is one of my stocks is like up 3% green. I'm like,
Wait, there's something green? What's green?
Digital Ocean, ticker DOCN. It's a small cap, pure computing play. That's a weird move. I'm trying to figure out why that is. Sorry, that's what I was saying. But regarding, yeah.
No, I love that. If you guys are seeing anything randomly in your portfolios and you just want to clue us in, do it. Go ahead, Shy.
No, I mean, let's see semiconductors. I think SMH is getting whacked right now, and there's some discounts potentially in like, wow, ARM is at $90 almost. That's interesting. ASML is not catching that much of a heat, which is surprising because they have that exposure in China revenue, like a decent amount. So they're holding on pretty strong. But SMH is just, that was one of the better shorts to do the ETFs last week. Like technically speaking, it was ugly, and that setup was just like there. But I don't know, we're in the fourth industrial revolution. You have to ask yourself, like, some of these components of these semiconductor ecosystems, there's bottlenecks right now. There's pricing power right now. Like in the networking component, like Broadcom's, Marvell, Astera Labs, like that's where the hot pocket is. But and there's also from the China tariff, like